Good morning, good afternoon, good day. Welcome to my midweek market meeting, 18th August 2021. I am Sagar Nandi, retired IT professional swing trading stocks using Q trading systems and techniques that I developed. This is my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run on underlying TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. Starting with the global markets, starting with Australian Index AXJO. This week Australian Index is showing some weakness. In the weekly chart, it displayed a bearish headwind, possible reversal signal, and the backdrop color flipped to magenta, bearish, from bullish cyan 1 week ago. In the daily, it displayed a bull release signal, and after that the flow color turned bearish. Today it closed with a doji candle. Yesterday the flow color turned bearish and it also came down with bearish pressure. It is showing weakness last 3 days. However, for swing trading purposes, it is still in an uptrend both in daily and weekly. Because the backdrop color in weekly and the traffic color in daily both are bearish, I will avoid taking any new long trade right now. Next we look at Japanese index topics. Topics is continuing to move inside the triangle pattern in both weekly and daily. Earlier it came to the memory trendline resistance, that is the upper edge of the sideways range. Right from that point you could look for shorting opportunities. The stop would be very narrow, and from there price came down, covering much more than the risk distance. That is how Q traders like to take short trades at the upper edge of the sideways range. Using the reverse technique, you could buy topics at the lower edge of the sideways range. Now it is closer to the lower edge. We would not like to short now. If price comes to the trend line support and goes up from there, then probably using intraday chart we could look for bounce long opportunities. Topics is moving inside the range. Next, China's CSI 300 index. China CSI 300 index earlier broke below the support, below the sideways range, and when it recovered from there, I had mentioned in live sessions that if it reverses from the trendline resistance, we could look for a short setup. That expectation came true. Price came down right from the trendline resistance. Came to the trendline resistance and reversed from there. If you used intraday fine-tune chart to take short trades, those trades covered more than the risk distance by yesterday's close. Today, that is Wednesday. Wednesday China market is already closed. Today price went up little bit, however the traffic light color is remaining bearish. I'll avoid taking any long trade, and it is some distance away from the recent high, so I will avoid taking short trade also. CSI 300 is continuing to move in a downtrend that is clear from lower high, lower low, and also it is clear from the fact that it has nearby trendline resistance but no trendline support. Next is UK's FTSE index. FTSE index is continuing to move inside the range. It is at upper edge of the range. That is a point where we would like to short. FTSE doesn't have any short setup using weekly daily Q trade setups. You might look for shorting opportunities using intraday fine-tune charts. Today's traffic light color is red so far. UK market is not closed yet. So far traffic light color is red. We would not like to buy now. It is at the upper edge of the range. We would like to look for shorting opportunities here. Continuing to move sideways. And lastly, India's Nifty 50 index. Nifty 50 is also displaying some weakness. Displayed a bearish headwind, possible reversal signal today. However, there is a trendline support close to today's low. That's why we would not like to short at the close of the day. If tomorrow price goes below the trendline support, that will give us shorting opportunities probably in individual stocks. The weekly is also displaying an indecision at the top. Weekly daily together will allow us to short tomorrow if price can go below the trendline support. That was a look at all the global markets. Mostly the global markets are remaining same as we saw in the previous webinar, that was the weekend webinar. There is some weakness, we saw some bearish headwind and also price coming down somewhat in the Australian index. UK and Japanese markets are continuing to move sideways. China market is continuing to be in a downtrend. What about the USA market? USA market came down little bit yesterday during the first half of the session. However, it recovered near the close of the day. If you followed me on Twitter, you would have noticed that I shared a post yesterday. See the time of the post, 1:38 p.m. Eastern Standard Time, about 1:40 p.m. Eastern Standard Time, and I mentioned that sector industry stock breadth is bearish. As of that time, 100% of sectors were down, 95% of industries and 85% of stocks in S&P 1500 were down as of 1:35 to 1:40 p.m. All the 11 sectors were down. Consumer discretionary was down by a very large minus 3.4%. More than 10% stocks crossed below mid-Bollinger Band. That we could see from the bucket analysis pie chart here. The percentage of stocks above mid-Bollinger Band was 61% one day earlier. From there it came down to 47%. So it was a drop by more than 10%. The histogram here showed the change between previous day and real time of the bucket analysis, and I noted that the percentage of stocks in the most extreme lower bucket jumped by more than 10%. That is the percentage of stocks below lower Bollinger Band, that is the lowest bucket, jumped from 5.1% to 15.9%. That was a jump of more than 10%. Everything in this chart was looking bearish, and I am participating in several groups, traders groups. Saganandi.com is one of them, of course. In some Skype groups, I saw people were very bearish. However, see what I mentioned, I booked some profit in my short positions. That was as of around 1:40 p.m. Eastern Standard Time. I think that was perfectly timed. How could I decide to book profit in short positions? One reason was because the market was flip-flopping between green and red in QH for sector industry stock advance decline for 1 day and 2 day periods. I'll show that. Why don't we look at that? QH as of yesterday's close. The 1 day and 2 day periods for sector industry and stock advance decline breadth, they continued to flip-flop between red, green, red. Couple of days ago, 1 and 2 day periods were green, and I mentioned that time that if the flip-flop continues, they would turn red, and exactly that happened. In the previous webinar, weekend webinar, I showed that 1 and 2 day were already red, and 5, 10, 1 month, these three periods were green. Now the red color has propagated more to the longer intervals. The 5 and 10 day periods have also turned red. 1 month is still continuing to be green. Now yesterday, using real time, I could see that these two periods were turning more red. In real time, this column would fill up with real time data during market hours. So that showed me that it was becoming very red, and as I shared in the tweet, the percentage of stocks in the most extreme lower bucket, it jumped by more than 10%. I have seen that when this jump is more than 10% in 1 day, in real time we could see that either in the lowest bucket or in the uppermost bucket, then it tends to reverse. And I had several short positions using options, put verticals. I had them on market ETFs. When the market reverses, then the options erode profit very quickly. I didn't want that to happen. So using the flip-flop, using the most extreme bucket percentage jumping by more than 10%, I decided to book profit in several short positions. And let's see how the market moved like after that. If we see the intraday breadth using Q Elite, what does it show? It shows the market internal breadth using the two composites Nasdaq, Nyse, and four major indices Russell 2000, Dow Jones Industrials, Nasdaq 100, and S&P 500. See the time from where all the markets reversed. This is intraday chart, 10-minute interval. If I use the cursor here, you can see the time. This is 13:30, 13:40. So around this place. I shared the tweet around this time that I booked my profit, and after that price recovered. It's not much on daily time frame, but the put options would have lost significant percentage profit, not only because price recovered somewhat, but also because the volatility would go down. When price fell sharply, volatility was very high, and when it recovered, the volatility would go down. Both the decrease in volatility and the price moving up, the delta move, would have reduced the profit in the put options significantly. Even the put verticals would lose profit. So my timing for exiting the trades were perfect. Now if we look at the market ETFs using weekly daily chart, let's start with S&P 500 ETF SPY, and I'll explain some more reasons why I booked profit in the short positions. SPY tried to come down but recovered nicely, closed with an indecision indicator, indecisive candle plus with an indecision at the top indication that came in daily as well as weekly. The weekly backdrop color turned bearish. Interestingly, the price drop between last 2 days is not much if you look at the daily interval. But even that price drop was enough to signal a biggest drop in 1 month. That shows how slowly but consistently price was going up. Even the small price move down in the daily interval was enough to flag the biggest down move in 1 month. It also displayed a bear release signal, and price came down with high volume, very high volume shown by this dot on the activity bar. However, the candle closed with an indecision shape candle. We wouldn't buy at this point, but neither would we short. There was no short setup. If we look at QQQ, and I tweeted about this earlier, this trend line support in QQQ was and is continuing to hold extremely well. 1, 2, 3, 4, 5. Yesterday was the 6th day when price tried to go below the trend line support, the automatically drawn smart trend line, memory trend line, tried to go below that and held. I was observing the memory trend line support. That was one reason I exited my short positions. One more reason. QQQ is moving sideways. After displaying this bearish headwind, it is practically not going up. The backdrop color is also bearish. Yesterday, it displayed a bearish kahuna, and we have many more weakness signals in the alternate chart. The PSAR reversal turned red. We have one pocket pivot bearish, then Mobo breakout from a squeeze with a kahuna. A large number of bearish momentum signals in the alternate chart, which is the HSI like signals. It is also showing that it came out of a squeeze in the Q chart. Will we short now? No, because as I mentioned, the trend line support was and is continuing to hold very well. If this trend line is broken and price can come down, that will give us shorting opportunity in probably many stocks. Now let's look at Dia. The time when I tweeted about closing my short positions, that time on the daily interval, Dia came right to the trend line support, both in the daily and weekly charts. That was yet another reason why I decided to close my short positions. As you can see, I timed my entry well. I could take short trades using put verticals. Those are safer because I didn't have to apply stop loss. In market ETFs, I timed it well. Though the daily weekly didn't signal any short trade, the intraday charts allowed me to short, and I had short put vertical in IWM. IWM was the weakest of the market ETFs, and I had discussed that right from this day onward. Even before that, it was weak, it fell down sharply, and when it recovered here, recovered for 2 days, and I showed in successive webinars that since then, though it was gradually going up, it had almost all the candles indecisive shape candles, and also many of them had indecision at the top signal. So you could look for shorting opportunities using intraday charts, and you could take it more confidently on this day when the flow color turned bearish. Somewhere here I had started taking short trades, and I added probably more on this day. Yesterday when it came to the almost low of the candle, I could perfectly time to exit all the trades. It also came to the 200-day moving average in the alternate chart. I didn't use that 200-day moving average so much. I used the trend lines and I used the intraday charts to decide my exit in the short trades. Very nicely timed, isn't it? IWM is also showing some weakness. Though yesterday's candle was indecisive in shape, it has indecision at the bottom signal in Q chart. It came down with high activity, not very high. In the alternate chart, I see Kahuna from a squeeze. Also a pocket pivot and PSAR reversal. So some bearish signals, but still because of the indecision shape candle, we wouldn't short at the close of yesterday. The short trade could be taken using weekly daily on this bearish flow candle, and I had started to short somewhere before that itself, but that was using intraday time frame. What are the charts of the market ETFs showing? It is showing that IWM is continuing to move sideways. If you look at this area, it is continuing to move sideways. All these long lower tail candles are showing that the lower edge of this price range is attracting buyers. It is not in a downtrend, moving sideways, and all the other three market ETFs, the SPY, QQQ, are continuing to be in an uptrend, though they are not giving any buy signal. When that is the case, it may be difficult to find trading opportunities. QQQ we saw was also moving practically sideways. IWM moving sideways over a longer period. SPY and DIA are in an uptrend, but they were going up very gradually. While they were going up gradually, the sector industry stock advanced decline breadth was and is continuing to show flip-flop. So that was making swing trading difficult, but not impossible if we were using Q trades. I shared multiple trading ideas last couple of days, some bearish, some bullish, consistent with the flip-flop of the market. I will review those trades, but before that, let's look at the market from few other angles. Let's look at the technical breadth. Make sure it is the USA market, yes. The technical breadth balance between bearish and bullish technical signals, the weekly interval first. This is using Q Finder. All signals clearly bearish. 77% bearish. Strength signals 83% bearish. Trend continuation 78% and trend reversal 63%. So across all the categories it is bearish. And the technical breadth is showing more bearishness than we can see from the major market ETFs. That is expected because the major markets were held up by the mega caps. As I showed earlier, and as we'll see today also from market breadth on Q Global. But before that, let's continue to look at the technical breadth. If we see the number of bearish headwinds, this is still not 2%, but it has increased since our last webinar, the weekend webinar. So that is showing some concern. The number of bearish headwinds, when it reaches 2% of the symbol universe, that usually precedes decline in the market. Another possible alert is that the percentage of stocks giving bullish signal from price extreme high is more than 50%. So more than 50% of the bullish signals are coming from stocks that are already at price extreme high. So they are overbought even on the weekly interval. So that is showing in aggregate overbought condition on the whole market, technical overbought using weekly interval. And if we look at the daily interval, yesterday's calculations. All signals 80% bearish, strength signal 92% bearish, trend continuation 82% bearish, reversal 60% bullish. So as I say, strength bearish with reversal bullish, overall they are bullish. Strength bearish, reversal bullish. So overall it is bullish provided the number of reversals is comparable to number of gap downs, but that is not the case here. The number of reversals is very small compared to the number of gap downs. So this combination here is not bullish, it is remaining bearish because the number of gap downs is much more than the number of reversals. So together they didn't turn bullish, it is remaining bearish. So as a whole, all the categories are overall remaining pretty bearish. Weekly and daily, both technical breadth are bearish. Now let's look at the market internals using Q Global Market Breadth. Let's first look at the composites. The Nasdaq and Nyse composites. I always look at the yellow line first, percentage of stocks above 50 MA, continuing to come down, both in Nasdaq and Nyse. For both Nasdaq and Nyse, they are below the 50% level, below the average line, the yellow dotted line, and coming down with lower high, lower low. That is continuing to show that under the hood, market is weak. Many stocks are coming down. Otherwise, the yellow line wouldn't come down for such a long time. Stocks are coming down, gradually falling below their 50-day moving average. However, the market ETFs are held up. QQQ here, SPY here in the candle charts, they are held up, and the conclusion is they are held up by mega cap stocks. Under the hood, the weakness is obvious from the declining yellow line. And yesterday it came down quite significantly. If you look at the 3-month new high low, you can see it is near the lowest extreme for Nasdaq, below 50% for NYSE, but not quite near the lowest extreme. When it hits the lowest extreme, at least some stocks tend to reverse. This is the 3-month new high low indicator. If today or tomorrow the NYSE also hits the lowest extreme, then we may look for a reversal up, at least temporary recovery. But it has not hit the extreme yet, neither Nasdaq nor NYSE. Nasdaq is closer to the lowest extreme, but not yet there, and NYSE has some more ways to go. But it is showing, it means the decline in the 3-month new high low is showing that though the market ETFs QQQ SPY are relatively very strong, under the hood weakness is there. And if I change to weekly interval, we see the obvious divergence in the yellow line, in the advanced decline, and in up down volume. Bearish divergence relative to the candle charts. This bearish divergence in multiple indicators, the yellow line, advanced decline, up down volume, they almost always, not almost always, it's actually they always precede a market drop. We see this weakness in the market breadth studies, Q global market breadth, always before the market dips drop. So that's a reason for concern. And if you look at the new high low, Nasdaq is also starting to make lower low in the weekly interval. Nyse is still not significantly red, but Nasdaq is clearly making lower low for new high low as well. It was not so for a very long time. That is also showing weakness under the hood. Even new high low, the slowest of these three studies, is showing weakness. And we can therefore see that Nasdaq is obviously weaker than NYSE, and that was true for quite a number of my recent webinars. That is continuing. Mega caps are very strong, relatively speaking, but under the hood Nasdaq is weaker than NYSE. If I look at the mega cap top 20, the Q Global Market Breadth Custom Index, after displaying the bearish headwind possible reversal signal, mega cap top 20 came down and it stopped right at the trend line support. Multiple trend line supports are there, the memory trend lines. They are not broken yet. If they are broken, then you may look for shorting opportunities in multiple mega caps as well. Relatively, we can see in this period mega caps are severely underperforming. Earlier it was outperforming, underperforming, outperforming, little bit underperforming, outperforming, severely underperforming. This relative performance chart on mega cap top 20 is showing the almost constant, very frequent rotation between the mega caps and non-mega caps. Relative performance going up for a few days, then coming down, going up again, then coming down, and at the right edge it is severely underperforming. If the flip-flop continues, we would expect it to turn up soon, and that may happen from the trendline support. We may keep an eye on that. Lastly, we look at the very useful USA market breadth total view that is based on the two composites and four major indices. The overall yellow line percentage of stocks above 50 MA is also coming down. It's at the 50% level now. Below the average line, coming down with lower high, lower low, that's showing the weakness in the total breadth also. The 3-month new high low has come down now below the 50% level. This red dot is showing that one-day decline is more than 20%. So yesterday had a significant drop, still far above the extreme low, just around 50%, just below 50% level. The lowest, these border lines are at 0% level. So new high low, 3-month new high, new low came down, but still has some way to go before it hits the extreme low point, from where a pull back up is expected. What am I looking for at the right edge when price is at or near all-time high? I am looking for breadth reversal signals like distribution count, Q signal, or Hindenburg signal. None of them are present. Therefore, I am continuing with my view that I shared in successive previous webinars, that though internal weakness is clear, I am not expecting a sudden and sharp drop because it has never happened before. What kind of stocks are in favor? If we look at the magenta line, growth versus value, when the growth versus value line goes up, that means growth is outperforming value, which was true until about this point in July, until about 25th July, and since then for about last 1 month, 3-4 weeks, the growth versus value line is tilting down, showing that growth is not outperforming anymore. Yesterday it tilted down more, so now relatively speaking value stocks are doing better, and small cap versus large cap, earlier it was coming down, so small cap was doing worse. For a while it moved sideways, and last few days again small cap versus large cap tilted down, showing that small cap is again underperforming, and that we could see from IWM also. IWM is relatively weaker. This market breadth study shows that internally there is weakness, though I am not expecting a sudden and sharp drop yet. Growth stocks are not outperforming anymore, and small caps are continuing to underperform. That helps us in deciding what kind of trades to take, long or short. The conclusion is we may take short trades more because of the underlying weakness, and the short trades may be taken in growth stocks and small cap stocks. That is the aggregate level view. The exact trade will be decided by Q360 degrees analysis on individual stocks. And I shared several such ideas recently. As always, before knowing the result, let's have a look at some of them. Recently, I looked at these two stocks, MBT and Orange. Let's look at MBT first. Came near weekly trendline support. When I first shared it, it was just below the daily trendline resistance. And I mentioned that I am looking for a breakout from the daily memory trendline resistance. This is a very powerful setup when a stock has weekly memory support and it is breaking from daily memory resistance. That breakout happened yesterday, so you could take a long trade at yesterday's close. The alternate chart had several momentum signals: PSAR reversal, MOBO breakout from a squeeze with a kahuna, and we have two kahunas now in 5 days. So several momentum signals, bullish momentum, and the Q trade setup is a breakout setup in daily, while the stock is at a trend line support in weekly. Very powerful setup. You could buy it at the close of yesterday. And when I shared it, I showed it, and let's have a look at that again. MBT, it was a strong fundamental stock. In this way, you could anticipate a trade and take the trade at the close of the market. Close of the market yesterday. While it is retrieving the fundamental scorecard, let's look at Orange. Orange, ORAN is the ticker symbol, fell down sharply in this area, stabilized, and 1 week ago, at the close of the previous week, the backdrop color turned bullish and it displayed a bull release signal. In the daily, it displayed the bullish headwind, possible reversal signal, moved sideways for a few days, and it closed with a bullish shape candle on this day. One could buy the stock on this day and put stop either below the trendline support, or one might decide to hold it longer term based on the dividend. Let's look at both these stocks, MBT and ORAN. I had showed at that time that both were having high dividend. This is MBT. Now it has retrieved the scorecard. Excellent dividend of 10.9%, very high dividend yield. Communication services sector, undervalued stock, great earnings quality, fantastic earnings growth, some revenue growth. So it was a stock with undervaluation and earnings growth, 3-star candidate with very high dividend yield. So one could buy it just for the dividend yield also, and in that case one may hold it longer term. And if we look at Orange, also belongs to communication services, great valuation, great earnings growth, some revenue growth. It seems to publish only yearly results, that's why it is a 3-star candidate, and see the dividend yield here 9.5%. So both of these two stocks were bullish stocks I shared few days ago. Both of them are holding up quite well, and MBT in fact broke out of the trendline resistance yesterday, though the market came down. So it was a nice breakout, strongly bullish breakout. Those were two bullish trades I shared earlier, and I shared a bearish idea on RRC. The backdrop color was bearish, and at that time it broke down below a trendline support on this day. The flow turned bearish and it had a breakdown setup. That's when I shared it, and since then price couldn't go up, reversed again from near the trendline resistance yesterday. Yesterday closed with bearish shape, bearish color in daily, bearish shape, bearish color in weekly. RRC, that was a bearish setup I shared, breakdown setup, continuing to move in the intended direction. X-ray, this is a stocks I shared several days ago when it dropped sharply. X-ray, let's check out the fundamentals, very strong fundamentals. Undervalued stock with fantastic earnings growth as well as revenue growth. So it's not only 3-star, it's a crown jewel candidate in terms of Q scorecard, and in terms of external view, funds are accumulating. So very bullish stock. You can see that the year-on-year quarterly earnings growth and revenue growth sharply tilted up. However, it dropped heavily at earnings, and those are often buying opportunities. It came to the weekly trendline support. I was looking for a bounce long setup, bounce based on the weekly trendline support. However, the bounce setup didn't confirm here because these candles had upper tails. So there was no buy setup at this point. And then on this candle, 2 days ago, it displayed a bull release signal, bullish pressure, price closed above this watermark support. So that confirmed a box long trade setup with a false downside breakout. That setup was confirmed 2 days ago, and yesterday, though the market was weak, this stock went up. So X-ray is continuing to move in the intended direction as we would expect using Q analysis. X-ray was in healthcare sector, is in healthcare sector, and 2 days ago when it gave the box long setup, I shared it on the Q website, my website sagarnanthi.com, that at that time healthcare was actually the strongest sector. And you could find not only X-ray giving a proper buy setup on that day, you could find several other stocks. I didn't post it on the forum at that time, but ITGR was another stock like that. Again, a stock that came to trendline support in weekly, and in this case it was not a box setup, but it gave a go with flow long setup 2 days ago. Yesterday ITGR also strongly went up in spite of market weakness. And if you check out ITGR's fundamentals, undervalued stock with fantastic earnings growth as well as revenue growth, so a crown jewel, and on top of that funds are accumulating. So if you see the way I am choosing stocks, I am identifying buy candidates that are giving technical buy setup, but beyond that I am also looking at strong fundamentals and also stocks that are in relatively stronger industries, and that is working out very well. As of yesterday's close, let's look at the sector analysis. Let's start with QH. Let's look at which sectors did better. In the previous webinar, weekend webinar, I showed that the conservative or defensive sectors were doing better. If I see yesterday's score, the strongest sectors, the three sectors are healthcare, utilities, consumer staples. Healthcare to consumer staples. So all of these are defensive sectors, and yesterday also healthcare was the strongest. Earlier it was weak and now it is the strongest. I already shared several buying ideas. Those are doing very well. So I could use the turnaround or possible turnaround in the sector to my advantage. Yesterday also healthcare was the strongest. And if you further drill down, you could probably find several low risk buy setups, and one of them was in CVAC or CureVac. Weekly had a sharp drop here, then price stabilized, backdrop color turned neutral, then it turned bullish but bearish shape candle, and this week we have a bullish shape candle in weekly. In daily, price had a sharp gap down move, created the watermark, retested the watermark here, and then once again for the third time here, and at this point, triple bottom point, it displayed this very useful reversal signal, headwind reversal signal. You could buy right at that time. The weekly was already yellow, so this bullish headwind signal also confirmed a headwind long trade setup. You could buy at that point. I didn't identify at that point. I don't have a long position. After the market closed yesterday, I was looking at healthcare stocks and I found this CureVac, CVAC. The daily is giving a bullish shape candle with bullish flow, so that's confirming a go with flow long trade setup. In addition, it has bullish pressure. It had a bullish reversal candle at price extreme low 2 days ago. That was this candle, bullish reversal, and then a go with flow long trade setup. That was confirmed yesterday. How is CVAX fundamentals? I didn't check that yet. Let's check that out. It's a biotech stock, not one of the larger biotechs. Smaller biotechs you may buy not so much on fundamentals but based on what they are doing and also on the technicals. Fundamentals are okay, undervalued but no earnings growth. Many biotechs, smaller biotechs don't have earnings growth, that's fine. The chart is looking fine. Personally, would I buy? I wouldn't buy a full position for my swing trading because I see revenue is very small, 6 million US dollar. Earnings growth is negative. Revenue went up, but earnings growth is negative and revenue is less than 25 million. There is a Q trader 3 who looks at stocks that have at least 25 million USD revenue in the last quarter. And I have also started using that guideline. So I may buy a stock like CureVac, but I will be cautious because the absolute revenue is very small. Yesterday, and if you look at the industry rotation scorecard, it was much weaker earlier. Now the second strongest, 146 score out of 147 industries. So CureVac is giving a proper buy setup, technical setup, and industry is also strong as of yesterday's close. There are other buying candidates also. There are probably shorting candidates as well. That shows that whatever be the market condition, using this Q360 degrees technique where you try to align not only technicals but also fundamental industry strength weakness, as the case may be with your trades, you can almost always find low risk trading opportunities. The market is moving flip flop, so that may be a reason to be cautious. Underneath there is weakness, but there is no Hindenburg, no big distribution count that is tempering my expectation of a sharp and sudden drop. We may be cautious, but we may continue to trade now both in long direction and some in short direction as well. We are at the 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session, which will be during the weekend market recap. If you are subscribing to the YouTube channel Trading Profitably, you will get notification on the link and the exact date time, and I also share it on my Twitter page. Thanks once again. Have a great week. Keep safe and trade profitably. No reason not to do that. Thank you.